Let's get to business, Mr. Morris.
Let's do it. Are you kidding me? I've got to do cold call? Like, get the out of here, man.
I've put everything into this. I've knocked on my friends' doors to give me money to start this. How do I separate the emotion from the reality?
I think you need people in your corner that aren't going to blow smoke up your ass.
But we mentioned earlier that a lot of these founders are not sellers. They're the technical people.
Ugh, sales, like, no, I'm a product builder. But the reality is at this point, the founder does know what it takes because they've done it.
From the Demo Stack Studios in Scottsdale, Arizona, this is Go to Market This Week.
Welcome to Go to Market This Week with Wayne Morris of Wayne Morris Consulting. How do you go from a founder-led sale to sustainable growth? That's what we're talking about today. Wayne, welcome to the studios here.
Thank you, Nick.
Beehive, shower stall. It's had a lot of nicknames, but super excited that you're here because I think what's interesting is you and I have a lot of sidebar conversations about what it actually means to build sales teams in a startup. And I love that you have a different take on it from most people, and that's because of the work that you typically do. So real quick, actually, I'm going to put you on the spot. In 10 seconds, tell me what you do at Wayne Morris Consulting. 3, 2, 1, go.
Yeah, so I help founders evolve from founder-led selling in order for them to be able to build a sustainable sales team. Simple as that.
7 seconds, even better. I like that. I also like our origin story because now we've gotten together a few times in Phoenix, but we met at a Thursday night sales event. We met at the Hard No Tour in Las Vegas, October of last year, so about a year ago. And I love how we had our first conversation because, I was watching, the World Series was going on, the Giants won the World Series, you live in San Francisco area, and you put a message in the Slack channel, who's watching the game? I was the only person still up watching the World Series game in the sports bar at the hotel. And you came down, we had never met, and hit it off instantly because one of the first things we talked about was Malta.
That was a fun time, that event, and it was meeting someone in the US that even knows where Malta is unusual. To meet somebody that had actually been and could speak eloquently about the place was a real treat.
Because I think I asked you, are you from the UK? And you said, yeah, I'm half British, but I'm actually half Maltese. And I'm like, oh, I've actually been to Malta. And as a guy who traveled all over the world in the cruise business, Malta is one of the coolest places I've ever been. It was fascinating. I was actually on a cruise there about 4 years ago, had never been. And me, like a big dummy, assumed, because it's going to be so close to Sicily, that it's going to be very Italian-ish, right? It was not. It was nothing like I expected. Just to paint you a quick picture, you come into this beautiful port city that's surrounded by these massive walls, and they're surrounded by these massive walls because historically Malta's been plundered by everybody, the North Africans, the Italians, the Greeks, everyone's come through Malta. And I think that's what's really interesting about it was all these different cultures added these different layers of flavor, different layers of spice to the stew that is Malta, one of the most underrated places I've ever been.
Yeah, I mean, my mother's Maltese. My father's in the military. I was born out there. Technically, I was born under the British flag in a military hospital. So I think technically I was born on British land,
right,
on the island of Malta. But I left when I was very young, but still have family out there. My mother's out there at the moment visiting her mother, who's still alive. And we used to go every summer, and I would go as frequently as I could. So for me, it's like my I'm British. It's, that's where all my formative years were spent. But Malta is like my spiritual home. And whenever I go, I feel a sense of warmth there. So it's one of those things that you can't control in life. You are who you are. And, I feel very Maltese. So I'm proud of that heritage.
So much history was fascinating. So if you have the opportunity, whether it's via cruise or you're going to somewhere in the Mediterranean, find an excuse to go to Malta. We did not just become a tourism show. This is not a travel show now. This is not a promo plug for the Maltese Tourism Board, but Malta is an underrated place. Find a way to get there. Definitely worth exploring. Let's get to business, Mr. Morris.
Let's do it.
Let's talk about the early stages of growth that a founder is going to have to navigate through to actually build a sustainable business, ergo sustainable revenue. So how do you look at that? What are those stages? How do you map them out in your mind?
Yeah, that's a really good question. In fact, a lot of founders don't map that out at all. They just go with gut and they just roll. And often what they find is when they get to a $10 million Series A funding, where all the underlying fundamentals look pretty good to an investor who has a lot of capital that they have to deploy, so they'll, maybe not do all the due diligence they should, is they use that money to step on the gas. And when they step on the gas and the engine doesn't quite rev as they expected, that's when they begin to think, oh shit, maybe there's things that I've missed.
Right.
So a lot of founders have to do this retrospectively. But for me, there are kind of three distinct phases of growth. And within those phases of growth, there are multiple pillars. So the first stage of growth for me is product market fit. So, product market fit starts with a hypothesis. So you have this hypothesis that your idea is going to solve problems for founders in a really valuable way. So you go speak to a load of potential customers and you figure out whether that's right. Once you've done that, you prove the value through having them feedback whether that was valuable or not. And then from that point, you then realize the value. And that's them saying, yeah, I'm prepared to pay for this because the value exchange is quantifiable in a way which justifies me spending something.
So how do you know that you actually have product market fit as a founder?
The only way that you really know is when you have a series of customers that have come back to you and said, the value that was exchanged through me using your product is quantifiable in a way in which if I didn't have it, my business would be worse. And I don't want to be in that position. I want to use your product. Having that at some kind of scale, it depends on the type of business, but having that at some kind of scale is signal that the product fits within the market to the point at which a founder, the people that you've been selling this to, see value and want to lean into it.
But how do you know that you're not lying to yourself and just thinking you have product market fit because of all the sweat equity you've put into getting the company this far?
How do you not kid yourself? So there's lots of things that you shouldn't do that a lot of founders do. So maybe we can touch on that. So what are the things that founders do that helps them kid themselves? Well, the biggest one is they sell to their friends.
Right.
So, someone has a vested interest in your success and it's not directly linked to the business. It's more around friendship and they become the exclusive customers that you then go and judge your future spend and the fact that you have product market fit. That's a false positive or could be a false positive. And you need to have a better mix. That's one example. Another, there's so many. I'll just give you a few. Another is giving the product away for free.
Right.
So it's like, hey, did someone actually pay for this, or did you just give it to them? Or you could even get them to pay for it, but it's such a meaningless sum of money that it's not really reflective of where you're heading. So are these real customers that see real value? And the key in all of this, if we had to sum this up, is like, how do you do that? You have to get the customers to replay that value back to you. Now, it doesn't have to be in hard cash, but ideally it would be. Replay back to me why this product is valuable to you. In your own words, please, Mr. Customer. It's incredible how many founders skip that step. That step is so revealing on so many levels. One of the biggest levels it's really revealing about is what your ideal customer profile actually is. So, if you have an ideal customer profile in your head and you go and validate it with your beta customers, great. But you should be iterating that ideal customer profile in this early stage of growth so that you can ensure that when you are going out to market and you're targeting your audience, it's a very focused ideal customer profile. So there's a stage within product market fit where you're basically going back and challenging your early stage customers to determine whether they should be your long-term customers. And often they're not.
And I'm assuming most people don't want to do that because of the fear that maybe there actually isn't the answer that they want.
Yeah, I mean, it's partially fear, but it's also partially kind of expectations. They may have taken some seed funding. They may be on this conveyor belt of growth. And the idea of pausing and going back is super scary for them. That could be one reason. Another reason is they just might not have enough runway. So they have to get it right at first time. And this idea of pivoting on the back of insights and intel they've got from the marketplace is just not possible, because if they do that, they're going to run out of money And if they run out of money, their business is screwed.
Right.
So there's all sorts of pressures on founders to do things in ways that aren't long-term healthy for the business. So part of my job is to come in and figure out where they're actually at and what they are doing and what they're not doing, fill in those gaps, help them fill in those gaps to determine, okay, when you get to the point at which you have the capital and you want to step on the gas, the engine actually revs and actually moves. It doesn't splutter, it doesn't force you to go back to square one and have to go reset expectations with investors, fire a load of people because you hired them prematurely.
So product market fit, one of the stages we're looking for. What's the next stage after product market fit?
So as soon as you have realized the value exchange, so realization of value exchange is where a customer comes back to you and says, yes, I need this, I like it, I'm prepared to pay for it. 10 to 20% of the value that's being exchanged is probably a fair market price for your product. Once you've done that, you've got a set of customers that you can look at and say, these look like ideal customers. Now what I want to go and do is move to the next stage, which is go-to-market fit. And the first stage of go-to-market fit is where you take that profile of customer, the firmographics and psychographics of the firm and the people that bought from you. You go find other organizations out there, build a list of them, and you find them and you go and do outreach and try and get net new customers from people that fit this new profile that that you don't know, that you've never had discussion with before. Because this stage, I call this stage the repeatability stage. So, and to be clear here, what founders often do, the biggest mistake founders often make at this stage is they think they've cracked sales, so they go hire a sales team. Right. And they abstract themselves from the process prematurely. And there's a whole issue around that we can talk about, which is what they shouldn't do. But it's the founder doing this at this stage. It's the founder still doing the outreach. It's the founder still having those discussions. And the goal here is to really try and get 10, 20, 30, depending on the average sale price that we're talking about here, a set of brand new customers that feel like you can scale. Now, this is when SaaS metrics start to come into play as well. So you've done the outreach, you're speaking to all these net new customers. Is the conversion rate from discovery to close looking like something that could scale if you poured more gas on this little fire that you've built?
Okay, what is that dynamic? What does that look like, that ratio?
I mean, it's different in lots of different businesses. If you have got a good qualification criteria and you've been out and you've targeted the right ideal customer profile, my feeling is that your conversion rate from the discovery phase to close cannot be less than 25%. If you work all of the cost metrics back, which we're not going to go into today, but if you work all those cost metrics back, you're really looking for about no less than 25% discovery to close conversion rate. Now, I think you can get it much higher than that. And one of the mistakes that founders make is their conversion rate from discovery to close is always a lot higher.
Because they're selling to friends.
Not just because they're selling to friends, because they just know the business inside out, and they're the founder, they're the CEO. It's easier for them. So one of the mistakes founders make is they say, well, I had 50 conversations and I closed, 25 deals. And I'm doing all this other shit in the business. So what I'm going to do is I'm going to go hire a salesperson or a sales team, and I'm going to give them much bigger targets, and I'm going to have much stronger expectations on their conversion rate. And it's like, no. They're not going to be as good as you, even if you're pulled in all these other directions. That isn't how you set your team up for success. So, 25% plus in that conversion rate is going to be, acceptable. Really, I think 1 in 3, if you've got your ICP right, so about a 33% close rate is something that I really try and look for in the enterprise world.
So we've got product market fit, we've got go-to-market fit. What's the third stage that you're really looking at for growth in an early stage startup?
So the third stage is when you're looking to scale, and you can only In my view, you should only be looking to scale once you have 2 or 3 sales units, sales pods, whatever you want to call them, working effectively. So all the SaaS metrics stand up and they look good. And in a sales pod, you could have an SDR at 2 AEs and someone in customer success. So you've basically built this mini sales org, and it feels like it's working. And to me, that's when you should typically go out and acquire significant capital, because it's at that point you know what your ICP is, you've proven repeatability, you now have proven that you can transfer your knowledge from you to multiple mini sales teams. So really now it's a case of like, how can we do much more of that? And that's when you would, in my mind, you would typically go raise a typical Series A, maybe $10 million, and just say, look, we just want to go build multiple sales teams. We want to go invest much more in marketing to really juice this up.
So product market fit to go-to-market fit to building a mini sales org / sales pod. In between go-to-market fit and building your pod, you talked about founders pulling themselves out of the sale too early. Mm-hmm. How do you avoid that?
Well, they need some sound advice. Because I think it's, for a lot of founders, they're product and engineering folk, right? The idea of selling to a lot of product engineering founders is a bit scary, but also not something that they necessarily enjoy too much. So getting them on rails, so letting them understand that it's a process, it's a transparent process, and having them find a way to lean into it, and really coaching founders that this is something that they should continue to do, and how to do it is the way that I stop them doing it. But I also try and paint a picture of where this is going and why this makes sense. So it's really, a lot of it is really just founder education more than anything, and convincing founders that it's just suboptimal for them to abstract themselves too early. The trouble is when as soon as you take a founder out of the sales process and you put somebody else in, what is lost is the feedback from the market into the product. Yes, some of it might go back, but there is nothing more powerful than a founder feeling the market. It's kind of heroics. It's like the founder needs to sit down with every prospect and live through them, because then that's the purest way that the product gets iterated, because the founder takes it back. So every founder has to understand the moment that they stop doing that, the richness and the fidelity of the feedback back into the product is going to be harmed. But it doesn't mean it stops. But even if you have a great customer feedback loop with the sales team that you create, which you have to have, it's still not going to be quite what it was when the founder was in there.
And is that just because of the way that the founder's asking questions, or is it because of the feedback that's being given by the prospect?
It's a little bit of both. The founder is, you abstract the founder, and the salesperson is in there, and they have sales targets. They're trying to close deals. They just don't have the vantage point that the founder has. The founder has multiple vantage points. They want to close deals. They want to close revenue. But the best founders want to build incredible product, and they know how to build incredible product. And they're looking for certain signals to then take back. The moment the founder's not in there, they're reliant on a third party that doesn't have their vantage point to feed that back into the product. And it's inevitable that stuff gets lost. So if you do that too early as a founder, you are going to end up building a suboptimal product. Now, some people get away with it and they find other ways to do it. But one of the, it is quite incredible how often you see an undercooked product at Series A. And you can often map it back to the founder just taking themselves out of the market, out of the sales process prematurely. And you often see founders saying, yeah, I'm going to have to go back and sit down with all these customers again. Well, you should never stop sitting down with customers, but the velocity at which they're going to have to go back and do it is something they should probably have done in that product market fit customer development phase.
So let's look at this as a high level and painting with a broad brush. Ideally, when should a founder start selling? And when should a founder stop selling?
Yeah, I mean, the facetious answer to that is a founder should never stop selling. But let's just be real about it, right? A founder needs to start selling from the very outset. And my view is, depending on depending on the slant of skill set that the founder has. So if the founder comes from a sales background and happens to be a sales founder, then they might be that first sales lead. They might actually be the VP of sales or the CRO at the point of Series A. So they might stay in it for a very, very long time. But let's just take the more common thing that we see, which is engineering and product founders. I wouldn't want to take my engineering or product founder out of the line of fire of customers, like on a high frequency basis, until I was sure that churn was under control. So it's one thing having sold the product. It's another thing having customers use the product. But especially if it's a monthly revenue play, you're going to be able to see how many customers are renewing and how many customers are spending more with you. And you just want to make sure that the revenue that you bring into the business is not only being retained, but is also growing, because then you know that you have really cemented the value of your product.
How do you know what to attribute the churn to when you're starting? How do you know if it's a product market fit issue? How do you know if it was that particular client? How do you know?
When I think about it from an enterprise perspective, it should be straightforward, because if you have enterprise customers, you should be speaking with them on a high frequency. And I don't think you should ever take for granted the value exchange situation. So you have to find a way to continually ask difficult questions to customers which relate to how valuable is this for you? And they need to be giving you answers that map to a renewal or an upsell. And if they're not, you have to be going back to the product and iterating it. So they might come back and say, this was good, but there's more products on the market now that do the kind of same thing as you. It's not differentiated, and these guys over here are a little bit cheaper. It probably doesn't make sense for us to renew from this point. Okay, but if you have the relationship, at least you're going to learn about that.
Right.
And if you learn about that, then the next question is, okay, what's missing? And what should we add that's going to add value? Now, if you're the founder and you're in that situation, it's easy for you to take that back and very quickly impact the product roadmap. But if you're not the founder, that's a much more difficult thing to do. So that this constant feedback loop is super critical to control churn. Now, there are signals in the product that you can look at, especially if you're a product-led growth play. You'd expect well-established product-led growth companies to be taking live signal from the product. You'll be able to see engagement metrics across different features go up and down, and you'll be able to see trends. So, you would argue that product-led growth companies need to speak to customers less, but that's just not how it plays out. Speaking with customers is the fastest way in which you can get to the real issues. So the way you control churn is by getting high fidelity feedback from your customers and not guessing at it.
We've talked about product market fit. We've talked about go-to-market fit. So now we're ready to build this pod. We're ready to start actually hiring a couple AEs, an SDR, maybe someone in customer success. What are the things that founders in your experience miss or aren't aware of when they're starting to think about that?
The classic mistake that you see is it's almost like the bright lights of tech. They get to this point and it's like, I've made it. I have made it. And sometimes founders want to validate that they've made it by going and hiring some well-established, well-known, big brand salesperson or salespeople. And yet what they forget is, you need to understand that the startup environment and your startup environment is unique. It's chaotic. And you need to have a bias to action, an ownership culture. No one is going to do shit for you. You need someone that's resourceful, evangelical. You need someone that is basically can stand on their own 2 feet and make no excuses for themselves and not look for all sorts of support and help. Now, good luck finding that from and no shade to these salespeople, but good luck finding that from someone who's 15 years tenured in a large tech company like Oracle, Salesforce, or whatever, Adobe. Like, they're probably there, but you're looking for needles in haystacks. So it's really critical that you understand what it takes to succeed in a startup, and you hire for that profile. Because if you get that wrong, you're going to make multiple very expensive false starts.
So where do we get it wrong?
Well, I mean, doing as I just described, going to the big companies and trying to get, getting wowed by, the salesperson that did $2 or $3 million in revenue in the last quarter, for example. Like, great, talk me through your environment. Okay, yes, I did $3 million in the last quarter, and my average deal size is $1 million or $1.5 million, or maybe it's one deal a quarter or something. Okay, great. Were those net new? Oh, yeah, good question. These were from an install base. Oh, okay. They're from an install base. Got it. Did you, how did you find that deal? Oh, there's a team of people that hands me these leads. Cool. When was the last time you did some outbound? Oh, no, we don't need to do outbound. Okay, cool. Talk me through the last cold call that you did that was really successful. Are you f***ing kidding me? I've got to do cold call? Like, get the f*** out of here, man. So, there's just, excuse me, there are just onion layers that you need to peel back to be sure that you have the right profile of person coming into this business. Because startups are tough. Outside looking in, they're super glamorous. But let me tell you, the very best startups have very, very hardworking people in those businesses that just want to go get shit done and won't let anyone stand in their way.
So you're looking for a full cycle seller versus a sales leader at this stage?
First stage is finding one or two people that the founder can test his or her ability to abstract themselves from the process. That's the very first stage. I wouldn't just go hire a sales team. We've got sales repeatability. The founder's proven that. We think churn is under control. Cool. Okay. We're now ready. And we've documented everything. Something that you and I have not talked about, which we should talk about.
Let's talk about it.
But the single biggest mistake a founder makes, bar none, is this failure to document what made them successful. Right? And I want to come back to that, but just to be really, really clear, they need to test whether that documentation can stand on its own 2 feet. And the way you do that is by going and hiring 1 or 2 salespeople, maybe push it to 3, but I like to hire 1 or 2, and use that documentation to do the onboarding and just see how successful they can get with that documentation. A lot of founders try and hire someone to create that documentation. Actually, that's how I built my career.
Right.
I built my career turning up to founders, learning via osmosis, and then doing the documentation for them that would allow us to go on and build the sales team. But that's risky. There aren't many people out there that can do that, in my experience. So it's really on the founder to try and do that. And of course, they can hand documentation to that person who might go on to become the sales lead and have them iterate it. But that's the first stage, is an abstraction to 1 or 2 salespeople.
Okay, I'm in full cycle AE. You're considering hiring me, founder.
Mm-hmm.
I look at the process you've built and I'm like, I don't agree with it because I worked at A, B, and C and we had different ways of doing this, or I was with another startup and we did it a different way. How do you handle that feedback?
Great. I want to hear all of that, but I want you to go prove it in the market by using the methods that we know have worked for us first. So, why you would not throw out everything that the founder has learned and just start. I mean, that would be a major red flag. For me, that's, I have my way of doing things. I've become institutionalized into my way of doing things in my company. Because it worked for me there, it has to work for you here. So I'm just going to cut and paste it across and just make it work. But that would be a red flag for me if someone came in waving that method.
But we mentioned earlier that a lot of these founders are not sellers; they're the technical people. So how does the founder know that just because they've hit 33%?
Nah, at this point, the founders are accomplished sellers.
You think so?
They are. They just don't know it. Or they don't want to be that. They don't want that moniker. That's the last thing they want because they have this view of what sales and salespeople are like. You often hear this from founders. I don't want to be a salesperson. Talk me through why. Ugh, sales, like that. No, I'm a product builder. But the reality is at this point, the founder does know what it takes because they've done it. So they can see. They will be. They're smart. They will be able to see whether these people can make it because they've done it themselves. It's the other reason why founders should stick with it for longer because they will be much more empowered to make and much more likely to make the right decision when it comes to hiring the sales team because they were the first in, they were the first doing it.
Let's go back to what you were talking about, documenting everything.
Yeah, I wish we'd started there actually. Because,
well, it's never too late, Wayne.
Yeah, because, oh man, like...
Obviously, you have opinions about this. I can tell.
Well, founders do such incredible work to get their companies off the ground, and they don't create any artifacts to illustrate how they did it, which is just mind-blowing to me. Because the question that you have to ask founders is, okay, if you haven't documented it, how's the next person going to learn? And how's the person going to learn from them and then from them? Because isn't that how you build a company? Because you have more people.
Repeatability.
And to do it at scale, you need to make sure that you have artifacts that people can take and use to make them successful, that they can then own and iterate. Otherwise, what's the alternative? The alternative is you're going to build a company via osmosis. I have just never seen a company built successfully via osmosis. And by the way, I tried this. I made this mistake myself as I said, I was the guy coming into early stage sales, early stage startups, and abstracting the founder from sales by creating the documentation myself. But at first, I didn't do that. At first, I just learned by osmosis. Like, right, okay, I have my way. I can now go hire a salesperson. And what I found was this: I could hire 2 salespeople plus me, and we would be firing, and the numbers would be great. But when that third one came, I didn't have the time to spend with them. There was just too much going on. Because when the third one came, I've got customer success, I've got SDRs, I'm spending most of my time hiring. I don't have time to like do all the heavy lift of training at this point. So I needed some support to do that successfully. And when I didn't have it, the third salesperson failed.
So should they be documenting everything in the company or just the sales process or, everything?
I mean, look, from a go-to-market perspective, you have to start with, what your ideal customer profile is. But if you work backwards from that, like what are your USPs? How do you figure out what your unique selling points are? You figure that out by doing competitor analysis. Who are your competitors? Where are you strong? Where are you weak? If that stuff's not written down, it doesn't exist. In my mind, it doesn't exist at all. So if you start there, you've got a shot. Because if you don't have that, then like the salesperson is going to come in and be like, so I'm just going to go like target all these customers because these feel like good customers. Well, no, because we tried that and we know that the value exchange isn't strong with those types of customers. So this is the area that we're focusing, and this is how you're going to have the best conversion rate, and this is how you're going to get the best deals. This is whether net revenue retention is going to be stronger. So let's focus there. You
talk to founders every day. What are some of the themes that you see that they struggle with?
Well, documentation is a big one.
Yep.
They struggle with figuring out how long they should stay in the process and when they should get out of the process. And again, a lot of what we've spoken about. When to take funding is another one. A lot of them, one good thing about enterprise is the big ticket items. So, there is actually an opportunity to get to sustainability or profitability quicker than in other organizations. So do you really need to take the level of funding that you're thinking that you should get? So sometimes it's just, it's right. Like I need to get to where I'm going faster and the funding will help me do that. Great. I understand. But sometimes you don't need to take the funding. Why dilute yourself when you're actually running what looks like could be a pretty profitable business pretty quickly, and especially in this market.
How do you step back and assess if you truly have something that could scale without funding?
There's a set of criteria that a venture firm called Craft Ventures put out. It's called SaaSgrid. I think it's saasgrid.com. And there they encourage you to like put in all of your SaaS metrics, and pumped out the other side, you'll see a relative measure as to like how healthy you are. The thing about metrics in SaaS is, like I said, it's a chaotic world, but for me, the metrics are this like calm bunker that you can go to and just truly look at the health of a business through impartial, very clean eyes, not rose-tinted spectacles. So founders need to have that at their fingertips at all times. I'd actually encourage founders to share that a lot more. One of the biggest mistakes I see potential VPs of sales making in the interview process is not asking enough about those metrics, because that will be really revealing. It's very easy, and I've made this mistake in my career. It's very easy to get wowed by the vision of a founder and the technology, but you have to cut beneath all of that, and the way you do that is by looking at the hard and fast metrics. So you need to learn about SaaS metrics. You need to understand what they are. I'll be writing an article on that relatively soon that is specific to both founders and revenue leaders. But like I said, the guys at Craft Ventures, David Sachs specifically, is very tuned into this stuff. So I would definitely have founders look there.
So I've got a sales pod. I've got 3 sellers, and because I documented everything, we're consistently selling.
Cool.
It looks like I'm ready to scale. How do I honestly assess that?
I mean, it's around efficiency of that sales organization, right? So you need to be ensuring that the money that you're spending and the money that you're returning back to the business is healthy. And if it is, you're going to be able to make a very strong case that if you pile in another $5 million of investment capital into go-to-market, that you can actually the numbers add up, and you can go add 2, 3, or 4 more sales pods. So, to get specific, some of the obvious things I look at are compound monthly growth rates. I'm looking at the component data of my recurring revenue. So how much of it is net new? How much of it is churn? How much of it is upsell? Do those ratios look right? So am I pouring gas on a fire that's literally just going to be, me growing existing business but still continuing to churn a load of stuff? So back to churn. Does that look healthy? What's my logo retention look like? Am I retaining 90% of my logos, or am I like burning and churning everything out, and I'm kind of marking time? What does the engagement in my product look like? Are my daily active and my monthly active and my weekly active usage ratios strong? Are people actually using the product, or am I really kind of kidding myself? This is just a sales machine. Do my margins look great? This is SaaS, so are they 80% plus margins? And if they're not, is this really a SaaS business, or is this a professional services business? Because if it is one or the other, you're going to think about how you spend money a little bit differently. What's it costing me to acquire a customer? And does that make sense? So, typically the cost to acquire the customer and the lifetime value of a customer needs to have a ratio of somewhere in the region of 1 to 3 or 1 to 4 for it to be healthy. What does it look like for me? What does my burn rate look like? If every dollar I spend, am I making $1? Or for every dollar I spend, am I just making 10 cents? So all of these things in unison will give you a picture about whether you're in a healthy state to go build more sales teams in that environment. Because if that's the environment you've got, when you look at the metrics, what you're basically doing is saying, I'm gonna go and expand that environment by 3 or 4 times. So if the metrics all look good, then great. But if the metrics don't look good, why would you expand a business where the metrics are not particularly strong? You're just making a bigger mess for yourself. So you kind of want to go back and optimize those metrics before you do that investment. So for me, I think you can take all the emotion out of it and just look at the metrics.
Well, you say take emotion out of it. That's very easy. You're good at that. But I'm an emotional founder. I've put everything into this. I've knocked on my friends' doors to give me money to start this. How do I separate the emotion from the reality?
I think you have to get help. I think you need people in your corner that aren't going to blow smoke up your ass. And I think you need people in your corner that are going to, that are helping you build a business that's actually going to be sustained over time. You have to find those people to help you. Simple as that, and so that's where advisors come in very, very handy. With all due respect to, VCs and stuff, your VCs have a dog in this fight. So, I mean, their advice is very, very valuable, and I think you should take it, but I don't think you should isolate yourself with just your VCs. You're going to need people that have seen this movie before.
Right.
And you're going to need to have them close by your side. And you're going to have to listen to them, and you're going to have to act upon them. Now, I'm kind of talking up my own book here, but like that is what I do, and the value of what I do is crystal clear. Businesses turn around and are able to scale much more effectively, and founders get very clear advice on what they should and shouldn't be doing. That is ultra valuable for a founder that's trying to build a real business. So getting the right team of people around you that are going to tell you it like it is, but do it in a functional manner that you can act upon is going to be critical.
What am I looking for in my first sales leader?
Yeah. So I think for the sales leader needs to understand what it takes to build a sales team, but they can't be so removed from the process that they're not impassioned to spend time with customers too, right? So they're going to want to have their eyes on the biggest deals, and they're going to want to be part of those big deals. But they're also, they're also going to want to.
I've got my sales process. I've got a pod working. I feel we have a repeatable process. What's the first thing I'm looking for, or what's the key thing I'm looking for in my first sales leader hire?
Look, the first thing I'll say is that sales leader might already pre-exist in the business. It might be someone that you've hired already. This person needs to pretty much act and operate like one of the founders, even though they're not one of the founders. They are going to be your eyes and ears on the ground, and you're going to need to trust that they're as committed to this as you are. And that's one of the biggest challenges that you're going to face. Now, the key that I find with sales leaders at this stage is there is a lot of moving parts, a lot of chaos in startups. So they have to, on one hand, they have to be able to protect their team from seeing all of that, because sometimes it just can be too much for people that are on their team and relatively new to the industry or early-ish in their careers, and it could be overwhelming. So on the one hand, they have to protect their team from that. On the other hand, they have to go into bat for their team with the leadership. So it's a really delicate balancing act. So finding someone that has the ability to protect their team from the chaos and keep them very, very focused, but at the same time, at the executive level, put the executive leadership under pressure to maintain that focus and hold them accountable to what they're seeing in the market is going to be key. At the same time, this person is in the big deals. This person is giving direction to the sales team. This person is credible at board level. This person is a pretty special person, and they're not that easy to find. I think from the founder perspective, the attitude that you have to go into this with is, I'm actually prepared to hand over the keys to go to market to this person. Now, I want to repeat this. The amount of founders that do not do that genuinely is incredible, and it's a huge mistake. Why would you hire someone in, tie one hand behind their back, and have them lead your sales team? You should not do that. You need to be 100% sure they're the right person, and you need to take the leap of faith and give them the keys and have them own the revenue. If you don't do that, their job was incredibly difficult anyway. You've just made it even more difficult. So find someone that you trust that can manage the team, feedback what they need to feedback to you, can be in deals, has the passion to be in deals, and that you're prepared to trust. Now, here's the thing. This might be a bit controversial. For me, when I was a seller, I needed to be able to look into the whites of the eyes of my sales leader and trust they'd been in my position before. If they hadn't been in my position before, I'm immediately questioning whether the advice they're going to give me is going to be accurate, whether they're truly able to empathize or they're not. And I felt like, as a seller, and I still feel like this now, if the sales leader has not been in the position that the individual contributors are in, something is lost. There is something that isn't quite there, which is why I say that leader might be in your midst already. Right. Because they've been there, seen it, and done it.
Lots to go through here as a founder, Wayne. Lots of...
It's tough. It's tough, but like the reward is huge. You're going to change people's lives with the product that you've got. You're going to build an incredible business, but you need to do it in the right way. Other things are going to come crashing down for you, and invariably that's what we see because most startups fail.
And if I'm a founder and I want help doing this the right way, where can people find you, Wayne?
Oh, WayneMorris.co. Follow me on LinkedIn. Do a little bit on Twitter, but WayneMorris.co. That's where you find me.
Thanks for joining us today, pal.
Thank you so much for having me, Nick.